Hi, this is the first of my 5-minute live sessions looking at the gold chart for today and looking for any potential trading opportunities. So here's my screen. Hope you can see that. I'm on the 15-minute chart. I've already marked up the 3 lines. Anybody who wants a little bit more detail on this, a bit of an explanation, can join the Zoom meetings that I do on Monday at 1 o'clock and Wednesday at 8:30 a.m. So that's 1 p.m. Tuesday, 8:30 a.m. Wednesday UK time. So I've got the field of play marked out. And if we just look back at what's happened so far today, you'll see that price opened here at 11 o'clock last night, and there was a big gap. It went from that point there up to that first green candle. So there's quite a few pips in that gap, and that is one reason why I don't leave trades running over the weekend, because that could have, if I'd been in a sell, that would have certainly taken me out as soon as the market opened today. So it went on a bit of a rise, and then it immediately slammed back down again, almost to the area that it started off in. And since then, it's almost entirely been within the field of play. Just follow my cursor and see what actually happened. It went down from the value area high down to the yesterday's POC, which is today's target. It then went down to the value area low. It only went down there, but it certainly went all the way. And then it went back up to the POC, back up to the value area high, and then back down to the POC, and then back down to the value area low. It took a dip, and then it returned to the field of play, and then it went from value area low to the POC, and it's been hovering around that area ever since. It did actually go up to the value area high on a couple of occasions. So in other words, what I'm trying to say is that there's been quite a few trading opportunities just simply using the 3-line strategy that I teach and that Jeff teaches in the V70. And what I should have done before I went any further was look at the news. And I've already looked at this, but I'm just going to show you what I saw. And that is that this red flag European news has already been and gone, but we've got quite an important thing here, which is in the States, they've actually got a bank holiday today. So what that tells me is that liquidity is going to be fairly low today, which might explain why prices sort of stayed within this field of play. If I were to make any kind of prediction, it would be that we're probably going to stay within the field of play for the rest of today because of the sheer lack of volatility. The Asian markets are closed now, and the New York market isn't open at all today. So we're purely trading with the London market, and I'm guessing that there won't be sufficient liquidity to move price drastically away from this field of play. That's just a prediction. I can be wrong. I have been wrong many times before. Right, so what I'm going to do is just have a look at the bigger picture and make a few observations. So this is the same chart, but I've moved to the 1 hour time frame. And this blue area here is yesterday's volume profile. So just to make it a little bit cleaner, I'm going to remove that and bring your attention to this blue area here, which is a slight deviation from what I normally do with volume profile. Normally, I would take a volume profile from the beginning of the day to the end of the day. But here, I've taken it from sort of midday on Thursday to early hours of Friday morning. And the reason for that is that you can see there was a huge increase in price over that period. It started down at the bottom here. If I just remove that, you can see it started down the bottom here, and then it went up, 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 all the way to that point there. It was not entirely all buys, but there was quite a lot of green candles within that. So I'm just going to put that back on. So take it from the lowest point to the candle at the highest point, and there you have it. Now, I just want to point a couple of things out. First of all, the volume profile itself. There are one, two, you could class those as all being one, or you could class them as being three separate peaks. But it is quite important, because if you see how when price went up from this starting point here, it slowed down when it got to this area here. It made a big jump, and then it went up to that area there, and then it went up to this area here. What I'm noticing is that there's a gap here. There's no volume at all in the market in that area there. And as you can see, that corresponds with a huge green candle. So that was all buyers. There were no sellers. So that is what Paul would refer to as an area of imbalance. And then we get this peak here, and there's some consolidation here. So opposite each of these peaks is an area of consolidation. There's one there, there's one there, and there's quite a big one here. So what this tells me is that if price decides to break out of this field of play and it decides to go south, there are a number of potential reversal points here. Price could actually drop down to this area of imbalance. It could even go down to this area of consolidation, or it might come back down to that original consolidation point. Let's just put some more detail on this. If we go back and we put the daily profiles on, right? So we've got that that unusual profile there, which I'd put on this huge price increase. I'll take that off, and we'll go back to normal. This is what we would normally be looking at. So we've got this area of imbalance. We've also got 1, 2, 3, 4. Just bring that in a bit. There are also 4 outstanding points of control. So those are all potential targets. Price will not come down and I'll try and demonstrate. Price will not start there and come all the way down to the bottom, all in one fell sweep. What is more likely to happen is this. Price will come down to that point. It'll reject, and then possibly go through. And something similar will happen every time it gets to one of these lines. It is highly unlikely that it will smash its way through. It's not completely unknown, but it's more likely that it'll bounce. It'll either bounce and return to where it came from, or it'll do this bounce up a bit and then down, then break through again. So those are areas to bear in mind if price breaks out of the field of play to the downside. What I also did was then look at what potential reversal zones there might be if price decides to break out and go north. And what I've marked on here, these black dotted lines, is previous highs. There are no outstanding points of control above this field of play. They've all been taken out, but what we have got is previous highs. So I've marked them there so that we've got something similar to these outstanding points of control. We've got potential areas of interest where price, if it does decide to go north, may well bounce or break, or bounce, retest and break. So that's a very brief look at how I'm thinking about gold at the minute. I'll just try and get back to the original chart. And then finally, what I'll do is I'll put the matrix on. The matrix is telling me, actually, I better just check my settings. Yeah, my settings are correct. So the matrix is still telling me that we're biased towards a buy, although price is actually bouncing off that value area. It's broken through the point of control and it seems to be heading south. And the other thing that I keep an eye on, as you know, is the Ninjacator. And for that, I need Heikin Campos. So we've got a Ninja up, we've got a Ninja matrix up, and it's telling us that price is likely to go on the increase. And yet the actual price is telling us something different. It's actually starting to head back down, although the trend line is still pointing up, it's green and still pointing up. So it still may decide to break through that point of control and go north again. Anyway, that's about it for today. I'll be back at some point tomorrow with a similar look at how I'm seeing the chart for gold. Thanks for tuning in. See you next time.